Welcome back. I'm Brandon, the HBAR Bull, once again joined by Zepsi. We both do some contract work for the HBAR Foundation, but we don't do these weekly updates in any official capacity. We're just coming to you personally to give you the latest in the Hedera ecosystem. Welcome, Zep.
How's it going, Brandon?
It's certainly going better this week, but as always, none of this is financial advice. Use it for entertainment or educational purposes only. So to start off, Zep, I wanted to get into another platform that is moving from the Ethereum ecosystem into the Hedera ecosystem. What can you tell us about Mint?
Yeah, so Mynt are a UK team. They're pretty well established in the music industry within the UK. And what they've noticed is that there is big financial streams within the world of Web3 that are there, and the dream is there, but they're still kind of largely untapped by what is sort of the mainstream music industry. Obviously we have some brilliant projects like Tune FM, like Siki. They're doing stuff on the streaming side, but through the power of NFTs, you can open up other revenues beyond that. So for instance, an artist who wants to sell a collection, maybe for an album cover, maybe for a music video, whatever it might be, whatever type of media, they can turn that into an NFT and of course have on-chain royalties and all the things that go with that. And so speaking to the team, they've obviously moved over from Ethereum. That's where they first launched some of their projects. But, they came to this crossroad where they thought, the sustainability of Ethereum, it doesn't sit well with artists. Musicians, artists as a whole, it's a demographic that is quite environmentally conscious. And of course, there's no better option on the market than Hedera for sustainability. We had the University College of London that put out their report that, again, for the second time, showed Hedera as the most sustainable ledger in the world, distributed ledger, public. And so it was a no-brainer in that sense. But then you go beyond that and you think, okay, what are they trying to achieve beyond sustainability? They're trying to bring value to the artist. And the issue is that on Ethereum, whilst there is this dream of royalties, it really is up to the marketplaces whether or not those royalties are enforced. It's not on the layer one, it's not on the protocol level. At least most of the major marketplaces haven't adopted the standard that enable that on-chain sort of royalties. But of course, on Hedera, that's another differentiating factor for us, is that every time a NFT is sold, whether or not that's on a marketplace, this can be secure trade and Hashpack and Blade Wallet, whatever it might be, whenever that trade happens, a royalty will go back to the initial minting address, and that royalty can be whatever they programmed it to be. It's almost a no-brainer, for a musician, sustainability and on-chain automated royalties, Hedera seems to be, a real promise for that vision. I spoke to them. They're a great team. They're working with Brandon Davenport, who of course is a very well-established, figure within the Hedera community. And they're basically going to be a sort of launch pad for musicians, established musicians that want to make their way into NFTs, but don't know how to navigate the landscape. So not only are they offering them the technical help, all of the perks of Hedera, but also the sort of NFT expertise, how community building works, how, all these different things that you don't really know unless you're inside the industry. So they really are there as, experts, bringing in artists into Hedera. So hopefully we're going to see a lot more musical talent within our community.
Yeah, great to hear. And Brandon D is really on a roll. He did some great coverage of the exploit last week, so we really appreciate that. But moving on to another industry, now they're also working in NFTs, but they are a monster in the industry, and they want to leverage Hedera, and that's the Juicyverse. Did you see that this week?
Yeah, I mean, Mars is the biggest candy supplier in the world, I believe. And when you think how much candy is consumed on a daily basis, to be the leader of that is a pretty staggering statistic to be able to display. I think what's really interesting about this for me is this is our sort of the first time we've seen a major brand move into the metaverse on Hedera. We've seen a lot of traditionally corporate companies, like the Aberdeens, like the DLA Pipers, these more sort of, I guess, old school institutions. But this is a more sort of, I guess, exciting, less sort of black and white company that is making their break. And, rather than going to a ledger like Polygon, where, they've done a great job in getting companies like Nike, they've seen Hedera, they've seen the promise of Hedera, this is an ecosystem that really is there for the serious actors, both within the more corporate side, but also beyond that. And so for them to have their break here, they've partnered with Metaverse, they're built on Hedera in their entirety with their ledger of choice. They've got the biggest mall, I think, in the Metaverse that's ever been created. And for them to team up with Starburst and Mars there, it's a big sign of belief in Metaverse as a project, which are building, continuously building on Hedera, but also Hedera again. And hopefully it goes well, and they'll expand, and we'll see more sort of sweet companies and less corporate companies moving in, having seen that this sort of bedding has been laid, if it were. Because I think the reason why Polygon gets quite a lot of these big partners is because a mover in the industry has gone there first. It's like you want someone in your industry that you see and you admire and you respect and you're competitive with to make that first move, and then for you to be able to feel comfortable that if the biggest candy supplier in the world can do it, then it's suitable for you as well. So I'd like to think this could be a sort of flagship for this sort of less corporate metaverse, and we'll see more of that in the future.
Like you said, Zep, this is a retail-facing brand, so they're going to want to learn how to engage with their customers in new ways while leveraging the metaverse. So it's, a proof of concept. They want to see how it works out, but it's a monster company, as you said, and they're just using one of their brands right now, Starburst, and of course, we're going to try to bring Hedera into the metaverse. They're using Starburst first, and then hopefully they'll bring some of their other brands in, like M&M's, of course, enormous. But it's good to see these businesses looking at Hedera and looking at how to leverage the space in general. All right, Zep, so we're going to make a hard left turn. We're going to go from the candy world and the metaverse into the Sustainable Impact Fund and refi. This week in Shark Bites, Rob Allen had some really interesting insights about what the Sustainable Impact Fund is doing and what they're doing in the refi space. And they actually bring in some DeFi into it. So it's an aspect that I hadn't heard about in the past, and it's really interesting. And he also has some insights on the exploit from last week. So let's listen in. Welcome back, Rob. How's your week going?
Hey, Brandon. It's been one hell of a week, but it's fun in the Hedera ecosystem.
It's definitely been eventful for sure.
That's for sure.
We'll leave the technical aspects to Swirls Labs and Hedera. But do you have any general thoughts you'd like to pass on around the exploit last week?
Yeah, look, when the network proxies were put in 2020. That's the time I was on the governing council. So, tech committee was very thorough in its consideration of this nascent network. We're still in phase one. People shouldn't forget that there is a very deliberate path to decentralization, and phase one is deliberately and planned to be overseeing the birth of this network, and that's going particularly well. One of the things about the birth of a new network is that it gets attention. And I'm very pleased that we're starting to get that attention because, they've stopped ignoring us. Now they'll start attacking us. And that's, as a former soldier, I like to be battle hardened. I like to know that, when it really comes push to shove, then this 100-year network is going to survive through thick and thin. So this is an opening salvo. I think it's probably, to be expected. Web 2 enterprises know full well that the cyber war is underway. I talked to many people in the space that are focusing on protecting systems, and it's relentless, 24/7. Platforms are attacked all the time, and so we have to expect it. It's just the way of the world now. Whether it be hackers or state-backed, operations, it's going to happen. So to have found a vulnerability in this way and to have reacted per the plan that has been put in place by Hedera and Swirls and the Hedera ecosystem is really heartening. We got away with a very small, relatively small amount of value lost. And which of course is hard for those who've lost it, but I'm sure that there are ways to mitigate that. And of course, we've got a lot of learnings, And the way the community came together, the way that, Pangolin and HeliSwap and Hashport kind of immediately formed this war room, the way that Swirls and Hedera and Foundation Governing Council kind of executed on the plan and all combined together to protect the value, right? This is all about protecting the value and protecting the reputation. We don't care particularly about the trolls on Twitter saying, oh, it's centralized. This is phase one, right? This is about protecting the network for 100 years. And we're going to go through this battle hardening over through this next phase. So as we approach the point where we'll have community nodes, we get into this next phase of expansion and decentralization. It's far better to know that we've had these tests. That's not saying we're not vulnerability testing it all the time as well, but it's actually really good to have external exploits to show us that there may be a vulnerability or two that still need fixing. And so, it's good. I think it's really good. There's so many positives to take out of this situation. Of course, our 100% mark sheet has been a little bit dented. But hey, it's a blip in the fullness of time. It happened in a week where my Algo wallet was hacked, and many of the top Algorand wallets were drained. We didn't have that. We had crypto banks going down, non-crypto banks going down. It was a week to actually absorb bad news, and I think we responded really well within that context.
Onward and upward. All right. So last week we got a taste of what's going on in the Sustainable Impact Fund from Wes, but I wanted to get your take. How is that ecosystem progressing in your opinion?
Well, I've not spoken about sustainability agenda and the Sustainable Impact Fund deliberately for the last few weeks because, as everyone knows, it's my kind of passion area and it'd be very easy to kind of consume all my time. But I am very excited about it. Anyone who's listened to Wes knows how passionate he is. He's got a team behind him. So Hanya Othman, Jonathan Rakoff, Paul Madsen, OG of OGs in this space. We've got Serge and Justin and Pathorn on the Swirls Labs side. So there's a big kind of focus in sustainability, as we all know. And we talk a lot about Guardian. I think people probably know what Guardian is. It's this open source stack which tokenizes, creates NFTs effectively from the project data that sustainability projects kind of generate, and in a way that is auditable, verifiable, and on chain. So this kind of adds quality, adds trust, it adds high definition data into what is a very opaque and say trust-free environment in the carbon markets, right? And not just carbon, it's all sustainability type assets. So we'll expand into biodiversity, into habitat renewal, into water, into all the safer planet type projects. So that's what Guardian does, and it's live. We've got a number of projects running it. We're generating assets. Dovo, everyone will know, but and Timeless and many others. Right? But the Guardian ecosystem is an ecosystem. That's just the tokenization engine, a very, very important part of it. But I kind of characterize there as three main pillars within the ecosystem around which functions and partnerships and new capability is forming. And those three are the Guardian itself, the marketplace, and the finance aspect, so the provision of liquidity into this kind of ecosystem. And what I want to talk about today very briefly, because we'll be talking about it a lot more over the coming weeks as it goes live, is Tolam. So Tolam Earth is the marketplace, or the first of these marketplaces. It's referred to as an automated regression market maker, an ARM, ARMN. And it was designed with some very, very smart people from Block Science. We've been working on it for a couple of years now. And the launch event for the marketplace is actually significant because what that does is it joins up supply and demand in a marketplace. We're creating the assets out of the Guardian and many projects. I mean, there's a big list of projects that are coming to market over the course of the next year. where's a set a very high bar in terms of targets, and the foundation is driving those assets into the ecosystem. But you need a marketplace. You need something to enable those assets to be bought. And you need it built on a network which is trusted and transparent and scalable in the way that Hedera is. So this is the second pillar, and it's key. It's really actually a keystone of the whole of the Guardian ecosystem, because once you've got a marketplace where these assets are discoverable and there's a fair price and it's very efficient and transparent and trusted, then not only corporate buyers but individual buyers can come to the marketplace and can search for assets to truly offset their impact on the environment. And this is all part of this journey into to net zero, to turning the corner in terms of the massive impact that the industry and business and individuals have had on the planet over the course of the last century or so. So, I'm very excited about what this means. Tolem Earth is going to change everything. I mean, can you imagine, and this is where I'm super excited, can you imagine making $1 million out of trading assets that save the planet? This isn't just speculation around cryptocurrency. This is DeFi with purpose, if you like. This is going to enable us to work out which assets are value aligned with us personally, work out where the good projects are, drive the right price, maybe speculate a bit, because there are corporate buyers in that marketplace as well, and actually trade to a better planet for the future generations and for ours. And the great thing about that is that it becomes a virtuous cycle. It's not extractive. You're actually driving a price which actually is helping the projects, and it's sending pricing signals into the marketplace that's creating demand, which brings more projects into the marketplace. So the third pillar being the liquidity and the financing aspects we'll talk about another time. But this circuit, which drives a greater amount of supply in the marketplace, which drives a better price, and in environmental terms, a better price is a higher price, because we need to get to a carbon price of around $50 a metric ton of carbon dioxide. And if we, and it's variable at the moment, right? It's from 2 to 100, and because the markets are so opaque. Once they're transparent, and once you've got this really efficient marketplace, and you've got people like you and I, maybe not me, but people who are actually very active in trading and DeFi but in a green agenda, it becomes very, very exciting. And then you can imagine all the analytical tools around that, and the more familiar dashboards, but applied to these sorts of projects. So watch this space. Within the next couple of weeks, we'll hear a lot more about Tolem Earth. And my vision of the next sort of 6 months or so is that it's going to draw in a lot of attention from people who otherwise wouldn't have had any interest in carbon credits and carbon markets, because we're about to see a real game changer, I think.
All right. Well, Rob, I'm not going to let you off quite that easy. I've heard numbers thrown out there of, this market's going to be hundreds of billions of dollars and so forth. With the foundation that's being built on Hedera, how much of that market share do you think could, transfer over to the Hedera network?
All of it. Why not all of it? And it's actually trillions. To move the needle in terms of climate change, in terms of net zero, we need trillions of dollars of new capital coming into this space. It won't be immediate. Some of the elements that we're putting in place in the ecosystem are cross-chain, because I think an efficient marketplace will draw in liquidity from other chains. There are a lot of well-meaning projects on other chains which don't have the benefits of the technology that we do, which I think will again attract attention. But there are so many buy-side There's so much buy-side demand in this. I mean, just look at the governing council. All of our governing council members have ESG obligations to meet and don't know where to go. At the moment, a corporate has an ESG policy. It's audited. It's an obligation on the business. And there are very few people who know actually how to go and access these markets. And the markets that they have are, like I've said, opaque. There are lots of middlemen and brokers. The projects themselves don't get the benefits of the price. So it's an entirely broken market infrastructure. What we're doing is we're changing that game, and no one else is doing that because no one else has got the sorts of technology that we can base this upon. So it's a long-term vision. It's a long-term vision that started years ago, and we put in place the standards with the Interwork Alliance, with the building and refinement of the Hedera network, the open sourcing of the Guardian stack, the open sourcing of the policies around the digital MRV, measurement, reporting and verification processes, which are related to the methodologies that the projects use. All about removing friction in that ecosystem in order to scale, right? There's no point trying to scale in a system that's full of friction, right? Because it won't work. But with Hedera at that base layer, with the Guardian ecosystem across the top of it, sort of utilizing that scale, we can then pump that ecosystem with finance, and then with projects and assets, and demand goes, because we know that there is no end of demand, because every enterprise on the planet needs to meet its obligations, increasingly so, and with very few places to go to meet them. I keep going back to what Marley Gray, who's Microsoft's chief architect and very, very focused on sustainability, said a couple of years ago when we were kind of working with them with the Interwork Alliance. He said there are insufficient verifiable carbon credits on the planet to meet just Microsoft's needs. So imagine that scaled by the number of enterprises and corporates, not even individuals. And we can get to the scale of individuals, right? We can fractionalize these carbon credit based tokens and biodiversity and everything else, and fractionalize them to the point where actually we can purchase them as individuals and not offset huge amounts, but aggregate smaller amounts. But that's for the future. I mean, these are all building blocks, but the building blocks are coming together in a form which is very, very exciting.
All right. Well, I certainly got the answers that I wanted, an order of magnitude bigger, and we'll take all of it. Thank you very much. Rob, thank you.
We'll have it all.
Take it all. Take it all. Rob, thank you so much for swinging by again, and we'll see you next week.
Thanks. Cool. Thanks, Brandon.
So again, it's always good to hear from Rob, and we were talking about CBDCs last week, and we have some really interesting developments in the Hedera CBDC space. Hedera announced a partnership with IDEMIA, who are creating a CBDC wallet. So their wallet is being built to enable an ideal banknote exchange for central bank digital currency. The IDEMIA Secure Offline CBDC wallet makes a highly secure digital cash experience truly available to everyone and at any time. This secure wallet allows a user to make consecutive digital offline payments with immediate settlement. The CBDC wallet user can initiate offline payments using any channel, contactless, email, QR code, and the same terminals and standards currently used for card payments. The offline CBDC payments can be received by any device, secure or not, with or without an internet connection to the ledger. So, Zep, did you have any thoughts on IDEMIA?
Yeah, I mean, IDEMIA, I think, are the leader in identity technologies. And so, these wallet solutions, these offline payment solutions, they're not messing around when they're choosing which ledger to go with or which to explore production on. And we actually saw IDEMIA, I think, a few months ago work with StraitsX to create the Singapore dollar stablecoin, which was an offline stablecoin, facilitated by their offline debit card using the Singapore dollar, again built on the Hedera token service. So it seems that IDEMIA have, really seen and doubled down on Hedera as a real institutional option for DLT. So hopefully we'll see more about that in the future. It's great that white paper's out there with Hedera at the bottom, featured as a partner in development. But also, this is a real sort of I guess, just wind in our sails for traditional finance as a whole. We've seen over the past sort of months, over the past few weeks, we've seen a CBDC pilot with Not Centralized, which you covered. They're doing a CBDC pilot with the Reserve Bank of Australia. Of course, we've got IDEMIA here with their offline CBDC, and then we've got all the brilliant work that Carmel and MTech are doing. So, I mean, the TradFi ecosystem on Hedera is definitely looking more and more robust by the day. And that is because, of course, the robust nature of Hedera. But, it's great to see that being sort of noticed by these big institutions.
Yep, and speaking of Carmel Cadet, she was just in a Twitter space last night by Hello Future Buzz, and she had some really good insights. So I wanted to grab a clip from that for everybody to listen to.
I'm not in the business of creating a government-controlled currency. That's not something I wake up in the morning and said, yes, let's go make, central banks control people and take their money away. I think what's very important to realize is that we use central banking money every day. Every day, we rely on that trust, that fiat currency that the banks rely on, and the reserves and the regulatory framework and the infrastructure that they rely on in order for us to get loans, in order for us to maintain a deposit. It all runs through central banking infrastructure. How do we make that modern? And I've been kind of from the go, the reason I left IBM is to put cash on blockchain. Not to make cash digital, just any other way, is to use distributed ledger technology in order to make it trusted, in order to make it more accessible, in order to make it more inclusive and resilient for financial markets. That's my personal drive, and that's the mission that we're on. And that's why when we learned and got comfortable with the Hedera Hashgraph protocol, we really bought into that. And people told me, how are you going to convince central bank to use public blockchain, a public distributed ledger? But that was the fight that we took on, and that's the mission that we're on now, because we believe that transparency and that trust is critical to adoption, right? Lack of adoption is a failure for us too, given that we're building CBDC. So building it in a way that we think is going to drive adoption is critical to me. So I absolutely hear people's concern and the lack of trust when it comes to central banking and the lack of understanding of what central banking does. You might come up with a framework that say that they're the government and they want to chase everyone and follow every purchase that they make. I haven't met that central banker yet. Let me just say that. And many of them are looking at how to drive financial inclusion. Their mandate is to provide resilient payment infrastructure. And interestingly enough, there's a legal framework through kind of governance that we all actually impact, right? When we vote for a president, they select who the Fed chair and who the central bank governor is going to be. Indirect, but there's a line of governance that we actually impact when it comes to central banking. We don't control what the purely decentralized world do. And there's value in that, absolutely. But is it to say that we should completely move away from a fully backed asset in that basket, right? So that's what CBDC can be, is another token, another crypto. I know central banks don't like to call it crypto, but another cryptocurrency, another virtual asset that represents that trusted fiat that we use every day. And so that's what we're driving to. When it comes to the FedNow deployment, the FedNow system is a payment system. It's not a change in the digital currency and how the Fed actually issues money. So very different. We're not involved in the FedNow system, but we are working on digital dollar projects and pilots that can showcase how CBDC can be used in various use cases, side by side with stable coins, side by side with other crypto assets. We really look forward to proving that out. And the partnership with Hedera has been great. And I want to be, I'm always very transparent to that. I don't hold HBAR, and I'm not driving the Hedera network because there's a financial gain for me personally. It's a good protocol. It's good technology. Coming from IBM, I have a good appreciation for having strong enterprise, best-in-class technology that runs and that nobody have to think about whether it's going to work or not. So that's what we're driving to. But it's a long-term game, guys. I want to make sure that that's very clear. We're not going to win every central bank. We will win, some we will lose, but it is not going to happen tomorrow. But that's our mission, and that's what we're going to drive to.
And it looks like IDEMIA is actually working with MTech as well. So there was a LinkedIn post from the VP of cryptocurrencies and digital currencies at IDEMIA. He said, "Our paper, Offline CBDC Payments, is finally out. Learn more on why offline payments are essential for CBDCs to succeed. The report will dive into how offline payments work, how to fulfill the promise of anywhere, anytime for anyone financial inclusion, is privacy the defining factor for the success of CBDC, how to ensure security and prevent double spending," and they include a link to the paper. They also thank the central banks that they're working with, as well as their partners, which included MTech, the HBAR Foundation, and Hedera. Speaking of banking and CBDCs, there's been an awful lot of stress in the space this week. And of course, that's having impacts across the financial market. It's actually having some positive impacts on crypto. But I wanted to catch up with somebody in the traditional financial space to give us a quick explanation. So we caught up with David Lane of Pari Fund, who's also really active in the Hedera space, to give us some insight. David, can you explain the stress the U.S. banking system is under and how higher interest rates play into this picture?
Yeah, of course. First off, thanks for having me. So the stress on the banking system right now, it needs to be separated from 2008. These aren't issues with bad investments. This is essentially a liquidity crisis. And in a way, it's been kind of caused by the Fed's policy over the last 10 years, 15 years with low interest rates. And then all of a sudden, this sudden spike up to about 4.5%. What has happened is with the recent bank collapses, you have three right now. You have Silvergate Bank, who primarily handled crypto deposits, bad investments on their end. Then you had Silicon Valley Bank. And what happened with Silicon Valley Bank is that was just a traditional run on the bank. Silicon Valley Bank's primary client base is businesses, not retail. Retail investors are insured up to $250,000. Businesses traditionally hold much more of this within their business account at their respective banks. Now, banks, in order to meet liquidity requirements, keep cash on hand. And then outside of that, they also make investments. They have a balance sheet. What they've been doing over these last years is, in a way, they've been forced to buy these low interest treasury bonds, right? We're talking anywhere from 25 basis points to 1%. With the recent increase in interest rates, these bonds have now gone down about 20%. I think Silicon Valley had like 120 billion on their balance sheet, and then they had to mark it down. Couple that with people saying, creating fear that there is no liquidity. Silicon Valley Bank essentially went through their cash reserves with people redeeming, withdrawing. And then on top of that, they were forced to sell at a loss, ultimately causing a liquidity crunch. With Signature Bank, which is the one that closed on Monday, I'm not sure what happened with that. They're saying, according to Representative Barney Frank, who's a part of Signature Bank, he was saying that they were insolvent. So he has this whole crypto theory that the government's out to get the banks on that one. But what's going on right now with the banking system, it's an issue of rising interest rates. A lot of these banks on their balance sheets, they have these long-dated treasuries that pay next to nothing in interest. With the rising interest rate environment, the value of these has gone down, forcing them to be sellers and in some cases not being able to meet their liquidity requirements.
And we talk about having a fractional reserve banking system, but really we have a capital requirements banking system. And as the interest rates goes up, the value of that capital goes down. And that's what's putting a lot of this stress on, right?
Yep, exactly. So like a bank will traditionally have, like, let's say just 50% in cash. The other 50% will be invested. There's a way they market certain bonds that are hold to maturity bonds. These they don't actually have to mark. And then they have available for sale bonds. These are traditionally more liquid, like treasuries. But over the last couple of years, over the last 10, 15 years, I mean, there's always been a quest for yield with fixed income investors. And it's been really hard to come by unless you start getting into more junk bond ratings. And even those weren't paying too high of a coupon. I want to say the Credit Suisse high yield index was mid 5% for high yield bonds. And then couple that with a sudden increase in interest rates, all of a sudden, a 30-year treasury paying 75 bips or 1.5%, whatever, is now faced with a 30-year treasury paying 4.5%. The underlying value of that bond is going to go down. Ultimately, it'll pull to par if you hold it to maturity. But It depends on the duration risk that each bank is willing to take. And again, what happened with Silicon Valley Bank was they're just a traditional lender. They are like the lender to tech startups. So people think that the venture capital firms were hit. A lot of VC funds and hedge funds actually keep their money with First Republic and some of the larger asset managers. However, their underlying portfolio companies where they've invested their money, they've encouraged these tech startups they've had a great relationship with Silicon Valley Bank over the last 20 some odd years. But what happened with Silicon Valley Bank wasn't a result of bad investments. It was a result of a traditional run on the bank, exacerbated by the ease of modern banking. A run on the bank in the 80s for me would be me and my dad going to Signet Bank and waiting in line to withdraw, right? Now I can just do it from my app and it takes 2 seconds, right? And I can within 24 hours. So when you have some major figures in Silicon Valley saying, get your money out, it just caused a run on the bank. They went through their cash reserves, then they were forced to sell. Ultimately, their liabilities were greater than their assets, and the Fed stepped in and took control of the bank.
I was going to ask how you see this impacting markets, specifically the crypto market in the year to come, but with so many variables, including inflation, how the real economy does, how the banking system holds up, and of course, how the Fed and government reacts to any banking instability and the other variables as well, it's probably more fair to ask how you're preparing for the next year, of course, with the understanding that none of this is financial advice.
No, yeah, of course. Right now, I'm all about rising interest rates. If you're sitting on the dollar, you're making 4.5% right now doing nothing, and it's risk-free, right? I think as long as employment numbers stay strong, I think the Fed's going to keep hiking. CPI, I want to say it ticked up 0.1% over January to February. So as long as employment numbers are strong and inflation is still high, I see the Fed hiking interest rates. I see valuations slowly coming down. With regards to crypto, while it stinks, Silvergate Bank was the primary lender for crypto companies. There's always going to be available forms of capital, but I see a lot of investors being much more cautious in their deployment of capital, especially when, if you're going to invest money, right, you need to beat a 5% hurdle right now, which is basically what the Fed has set. So they're going to be much more cautious in their deployment. I think they're going to look for more credit opportunities. I think it's for startups, it's going to be a lot harder to take out loans. People are going to be more selective in what they deploy to. But I mean, ultimately, where there's a need, where there's a demand, people are going to fill it. And, I wouldn't be surprised if you start to see some smaller market lenders come to market. I'd be interested to know what interest rates they charge to lend. But, big banks have been around for 200 some odd years in the US. And the people there's always been a group of people who can't get the loan from the big banks. So they always seek out alternate forms of capital. So I would expect that sector to see some growth, different types of lending. But I don't see crypto going away. If anything, Bitcoin's been up 30% in the last week and a half. So who knows? We'll see. But I said in the beginning of the year, it took about 12 to 18 months from when the Fed started printing money for inflation to really hit a point of concern. So I see another 12 to 18 months for things to kind of neutralize. And we're about 9 months into this kind of hawkish policy. So I'd give it another year. I think interest rates are going to continue to rise. I think valuations are going to continue to come down. And I think investors are going to look for more opportunities to provide debt as opposed to just taking equity.
David, thank you so much for swinging by today and explaining what's a pretty complex subject.
Of course, Brandon. Thank you very much for having me. Happy to help. Appreciate everything.
And actually, Zep, the stress in the banking system has actually gotten bigger. We've had some really big banks in the world run into some trouble, like First Republic in the United States. We have Credit Suisse also having some trouble and needing some bailouts from their central banks. We've run into a lot of these banking issues. And unlike, the exploit where we had last week, where we fixed some code and we're not going to see that exploit again, we have these same issues over and over again. Bank runs and stress like we saw in 2008, and they have the same tools. This is going to be a little bit different because then the issue was deflation, but we are having these banking issues in the middle of inflation, and that really puts the Fed in a tough spot. Like the tools we have to deal with this are things like the FDIC, insurance, and of course they can't cover all deposits. So the lender of last resort, if things get really bad, is the Federal Reserve. But the only way they can cover all those deposits is with newly created money, and of course that runs into issues issues with inflation. The other thing is, of course, the Federal Reserve, our central bank, does have a printing press, but they also have a monetary incinerator that they can reverse this if inflation starts to get too bad. But the only way they can take money out of the system is by selling bonds into the system. And that puts downward pressure on the bond market. And of course, with higher interest rates now, bonds are already lower in value, which gives them less firepower to churn up that monetary incinerator and try to get inflation under control. I do think that they are going to get all this under control. They're going to figure this out. But we see these same issues over and over again. And as a monetary and banking history nerd, it's just interesting to see how they're going to deal with this latest one. And of course, that gives some credence to alternatives. In the past, that's always been gold, but now there's macro assets like Bitcoin that are getting some tailwind from this. And that's, of course, helping Hedera as well. The main crypto macro asset is Bitcoin, but I think any fixed supply cryptocurrency can fill that role like HBAR. So again, I know I'm going off on a little bit of a tangent, but it is interesting to see how this is all impacting the broader financial system and cryptocurrency more specifically. All right, so let's shift gears once again. Hedera has had a big presence at a few conventions going on around the world. What can you tell us about that?
So last week we briefly touched on the Hedera ecosystem attendance at South by Southwest. And so we've seen, them out there this week, and we even saw Dr. Lehman Baird, i.e. the inventor of the hash graph, in conversation with Roadcode. As we've spoken about before, Roadcode, they're a big cycling project that are basically bringing the world of Web3 to cycling, or rather the world of cycling into Web3. And they've got all the partnerships. They're partnered with Velon, which has the IP to some of the biggest racing teams. Through that, they've got, they can use certain licensing and branding throughout some of the biggest cycling events in the world, which we'll see more about in the future. But, beyond that, they are really bringing this kind of fan engagement, or, bringing more fan engagement to cycling, which is, I actually think that the Tour de France is the biggest event next to the World Cup in terms of viewership. I think some years it even surpasses it, which is insane. And of course, that means there's a huge amount of fan base and a huge amount of fan base that can be activated. And so far, they haven't been activated in the world of Web3, and so they're doing that. But Lehman actually, I think it was really interesting for me to see that he's got this real interest there. Out of all the projects that he could have done this interview with, something drew him to Roadcode. And actually, hearing some of the dialogue that they had together, it seems that Lehman's got some actual more ideas on how they can use their data and things like this than I think they actually had themselves to begin with. So it looks like the genius of Lehman has seen something with Roadcode even more than they currently have, and I'm excited to see whether we'll see something from Lehman's lab, or that this obviously me speculating. But whether, we'll see more of Lehman's involvement there or something, I think that'd be really cool. But yeah, beyond South by Southwest, we were at Paris Blockchain Week Summit at the moment. And I think the first panel we saw was this refi panel. I think it was refining the future of finance or something. And you had Hanya, who is, a part of the Sustainable Impact Fund at the foundation. You had Nicolo, who's he's the council member for ServiceNow. And you also had Dovu and some other of our ecosystem partners on that panel. Refi is a narrative that we've seen getting more traction. This idea of changing sort of capital flows and pushing them towards more sort of sustainable investment, unlocking new capital flows to sort of incentivize that investment, and so on and so forth. It's sort of green investment in a way, and to have a figure like ServiceNow on that panel, ServiceNow service 80% of the Fortune 500, to have them on that panel behind this narrative of refi, I think is a big thing. And I think a lot of people at Paris Blockchain Week Summit who, are looking more towards this sort of institutional adoption of Web3, to see ServiceNow there with us and around this narrative of refi, I think that's a really powerful symbol, that their ServiceNow is actively part of our refi ecosystem, but also they believe not only in sustainability, but this buzzword, i.e. refi. And hopefully, it's a narrative that will only get bigger and bigger, whilst eliminating, we don't want greenwashing, we don't want things like that. The Sustainable Impact Fund has a very, very good mandate of sniffing greenwashing out. all the investments that have been made by that fund are all done, under the guidance of Wes and the others to basically avoid any greenwashing. So just to make that clear, when there is something like refi, when there's a lot of money involved, of course there's room for greenwashing, but Hedera, the foundation, are really doing everything they can to avoid that.
Yeah, and after hearing what Rob had to say about that space, it's definitely exciting. But going back to what you were talking about initially with fan engagement, I caught up with Matt. He's the CEO of Game On, and they're creating a game around karate combat called Karataka, and it's built around karate combat. Of course, they have great fan engagement already, but this is going to take it to a whole new level. So let's listen to what he has to say. Matt, can you tell us about your karate combat themed game, Karateka?
Yeah, Karataka is an exciting project for Game On. Just to kick it off, Game On is a B2B technology provider for content owners. What that means is we're working with sports teams, sports leagues, TV networks, and we're building engaging fan experiences for them, primarily games. So things like prediction games, fantasy games, and a lot of the time they're Web3 driven. So Karataka is our up-and-coming project with Karate Combat. Karate Combat are a martial arts league, a karate league that gets about 10 million people streaming their events every month and about 200 million video views every month. And you being from the Hedera community would be pretty familiar with who they are. So we're really excited about this project. What it is it's a collection, first of all, of playable digital fighters. So all the fighters that you know and love from the Karate Combat ecosystem will now be part of this project. We'll be using the IP of the fighters, which is really exciting. It'll look and feel like the fighters, and the art direction is a pixelated art theme. So to really tap into that 90s Street Fighter, Mortal Kombat type nostalgia, which Karate Combat loves to play on. But that's not it. What's most exciting is how you'll be able to use these playable digital fighters. So as you can probably guess, they're playable in games. So after we launch the project, there'll be several games that will be rolled out. The first will be a quests game, which is really about collecting and completing different quests that have themes around them. Like, for example, you might try and collect one fighter from each continent in the world, and if you do, you earn a prize. So that's really about collecting. But the most exciting game is the live fantasy game. So based on your ownership of these playable digital fighters, you'll be able to create a fantasy lineup before each event, and then based on the actual events that are happening, every time a punch is landed or a strike happens, every time there's a takedown, every time there's a kick that's landed, you're earning points and rewards and karate tokens and other different types of in real life experiences based on how your fighters actually perform in the live events themselves. And then after that, we'll have a PvP card battle game. So, those events only happen once a month, but every other day of the week, every other day, 24/7, you'll be able to go head-to-head with other Karate Combat fans in card battle games based on the stats of your NFTs, the stats of your playable digital fighters and whatnot. So we're really excited to launch this. We haven't seen any other collection out there that does this kind of thing where you really have these playable digital assets that you can use in games.
Well, you're definitely taking fan engagement to a whole nother level. So how exactly are you leveraging Hedera?
So we've chosen Hedera to build this experience upon. So that's where we'll be minting the NFTs, the playable digital fighters. The games interact with the hash graph, but they don't actually have to be built on the hash graph. If we go back to our philosophy of engineering, we don't build stuff on a blockchain or on a hash graph if we don't have to, but it connects and interacts with it in a way that's really necessary for the game, necessary for the ownership, and for the rewards that will be distributed as part of the game as well. So we're really excited to work with Hedera. We've known them for quite a long time. They did the Karate Combat deal, and then after knowing them for quite a while, Alex and team over there at the foundation, they decided to support us, and we took that on, and we're excited to build this experience on Hedera.
Good stuff. So Hedera community members that want to get involved, what are their next steps? What do they need to do to get involved?
Yes, I mean, right now we are rolling out the VIP pre-sale, so it is kind of behind closed doors. But if anyone would like to get involved in that, you can email me and I'll put you in touch with the right team. It's matt@gameon.app, so it's matt@gameon.app. The VIP pre-sale is at a steep discount. It's $19.99 per playable digital fighter, but there is a minimum quantity of 50. So if anyone wants to reach out and be part of that, we're executing that via a SAFT. And then thereafter, in the coming months, leading up to the Karate Combat events, there'll be whitelist opportunities and further discount opportunities, but none quite as steep of a discount as the $19.99 price point. So if anyone does want to get involved in that, let me know, reach out to me directly. If not, go to karataka.io, sign up to email updates, and you'll get lots of notifications on when the whitelist will happen.
I gotcha. So, Matt, I've loved every interaction I've had with Karate Combat to this point, and I'm sure your game is going to be no different. So, good luck.
Thank you. I appreciate you having me.
Yeah, it's definitely really exciting, I think, to see this IP of Karate Combat being, leveraged even further. When we look at their viewer base on a platform like Instagram alone, I think they've got millions of followers over there, and collectively tens of millions of followers and more, across their platforms. And, that's great, for when we have something like the Karate airdrop. Hopefully that'll be a lot of new accounts on Hedera. But when you've got an audience that big, you really want to be activating it in as many ways as possible. And of course, there's a big crossover between, fighting sports, gaming, and crypto. So it seems like this could be, for the people who are less interested in, voting on Karate Combat and being part of the DAO, this is a new avenue for them to get involved in our ecosystem, for us to nurture them through into other applications and really bring them into the world of Hedera. So yeah, I'm excited for that one to come out for sure.
All right, Zep, I'm definitely excited on that one, but we had some other announcements come out in the gaming space as well. We had some stuff come out from Legends of the Past as well as 1 to 11. What do you have for us on those?
Yeah, so the co-founder and COO of 1 to 11, a man called Anirban Chatterjee, I'm sorry if I didn't pronounce that right, but he got awarded the Web3 Founder of the Year at the Web3 Global Asia Awards. And, this it's no small event. It's hosted by Entrepreneur India, which are one of the biggest organizations of its kind within the world of business, especially within India. So a big achievement there for Anirban. And so 1 to 11, the company he co-founded, aren't just building, one game on Hedera, but a sort of an entire ecosystem. I think it's about 3 games. And, their ethos there is these sustainable play to earn, so tokenomics that aren't just going to, crash over time, really built from the ground upwards to cater to what gamers want, but to make sure it's not just going to be, something that shoots into the air and then spectacularly sort of crashes and burns. But one of the games that particularly interests me, I think that's coming out of this partnership is their cricket game they're building. So it's in the same way that we're seeing Karataka, activating Karate Combat's fan base, the fighting fan base, in the same way that we're seeing, Road Code activate, the cycling fan base. We're seeing 1 to 11 hopefully activate India's cricket fan base. And Indian cricket it's a huge part of their culture. It's sort of like English. It's football to the English or American football to the Americans. This is their national sport, their pride and joy. And so there's a serious fan base there to harness. And hopefully we'll see them execute that well. And the fact that he's won this award would give me a positive indicator that they will be good at executing this.
Agreed. And anything from Legends of the Past?
Yeah, so Legends of the Past, big up Basil and the team there. They are, they're still full steam ahead. They're doing very well, and well enough to have been accepted into the Blockchain Gaming Alliance. And the Blockchain Gaming Alliance is a sort of collective of loads of different Web3 gaming companies or teams or startups from all over the blockchain space. So this isn't just Hedera. This is, Polygon and Immutable and, all the other layer ones. And so they're going to be exposed not just to the Hedera echo chamber there, but all sorts of builders, all sorts of entrepreneurs. And I think that's really great because, Basil really loves the Hedera tech. He loves the HBAR variants. And, of course, he sees the vision of Hedera gaming there. And hopefully he'll be sharing that with the other people that he meets. So great job to Legends of the Past, and exciting times ahead for them, definitely.
Yeah, congratulations to both of those teams. And real quick, before we get into network analysis, I wanted to see if we could get an update on Galaxy as well.
Exactly. So Galaxy, of course, have been one of the big projects on the horizon for us for a long time. Web3 social media only becomes, sort of more valuable over time. I think when we see things with, the CEO takeover of Twitter, when we see the data issues with Facebook and Cambridge Analytica and all these institutions, there is a clear value proposition within Web3 social media. And they really will be one of our, I guess, first to launch social media platforms, but also one of our most anticipated. And they've got their Galaxy DAO, and within that they've got the Galaxy Labs, essentially the world's labs equivalent. And within that they're building different applications. And the first of these is, of course, the app Galaxy with Solo and Spencer and the team there. And so we saw some new teasers there. We saw some more sort of in-app footage, as it were, and the UX looks really clean. I mean, it looks great. The design looks great, and I'm really excited to see us take one step closer to that vision being realized.
Oh, yeah, I have no question. That team is dedicated, and they're going to make it come to fruition. That's for sure. All right, let's get into some network analysis. So over the past 24 hours, we've had 64 million transactions. We've been cruising at that for most of the week, so that's setting some new records. And we're at just about 400 million transactions for the week. So we've certainly made up some ground from last week. We've had almost 40,000 smart contract calls over the past 24 hours, showing our DeFi space is strong. Time to consensus is still at 5 seconds. Account creation has tapered off a little bit in recent weeks. And moving down to our fungible token summary, our DeFi tokens like Wrapped HBAR, Sauce, Dovu, USDC are looking pretty strong. And we have a new token in there, Grelf, that is really starting to take off. First, before I get your thoughts, we did catch up with him again in that Twitter space last night with Hello Future Buzz. So let's listen to what Kreese had to say about Grelf.
I made a token called Grelf. You can see the face of the mascot of this token is one of the listeners. He's ugly. He's weird. He's bald, and some say that he's creepy and hard to look at. I agree with all those things. Now, what is special about this? Well, something miraculous, friends, has happened over the past few weeks. This meme coin I created on HTS now has over $1 million market cap. It is the most successful HTS token that's originally made on the Hedera network. So, like stuff that's if you bring Chainlink over to HTS, obviously that's a bit more successful, I'd say, for now. But as far as an original token, as far as a meme coin, it's number one. It's been insane. Why has it happened? I have absolutely no idea. I did not plan for any of this to happen. Let me, get that out straight. But now that it has, I've found that, and I've seen this, people on TikTok, people on YouTube, people I don't know, have never contacted, have started making videos about Grelf, more specifically, how to buy HBAR, make a hash pack, get onto SaucerSwap to get Grelf. So I've found that, having our first real breakout meme coin is actually a great opportunity to onboard people to our ecosystem. A lot of people are very skeptical of Grelf. Why shouldn't you be? It's a meme token. There is no utility. It is silly. It's got a fixed supply of 6.6 million, no keys. I can't do anything. No one knows what's going on. It's really fun, but I think it's a really good opportunity to catch some attention from types of people that I would say Hedera hasn't looked at super hard to target. People that wouldn't be in for all the great technological benefits or the massive utility and speed and all the things we love about Hedera. That doesn't mean that we don't want them here too. While I do have some people saying maybe we shouldn't push this. Yeah, Grelf is silly, but I say if it's silly but gets people onto our platform, gets people on a SaucerSwap, gets people using hashback, gets people buying HBAR, who cares?
Yeah, so I mean, this seems like our first meme token to take off. Some people don't like the ideas of meme tokens because they're a bit of they are a joke. That's the whole point. It's not within the lines of the sort of more corporate trajectory that Hedera is on. But it's this kind of fun, this kind of meme token that really brings new users in. We saw it with Bonk on Solana, which sort of resuscitated Solana from the dead. We saw, of course, Shibu and, Doge on Ethereum, which, are still in, whatever, in the top 30 or whatever they are now. And so they come with an entire culture behind them. It's a meme culture, which is, so pervasive on the internet, which is sort of the fabric of the internet to a certain extent, at least on social media. So to have our own sort of meme token, I think is really great to see. And, from Kreitz as well, he's a builder in the ecosystem. And, this is something that I think just sort of come out of nowhere. He built it a long time ago and it's getting this attraction. I think so much so that I think so in the spaces yesterday, it was about 25 cents when he was talking. And it went up to 35 cents this morning. Now it's down to about 29. So, obviously volatile, but it seems to be on a bit of a mission, which is, really great to see and exciting to see for sure.
Yeah, and like Kreitz said, it's bringing people over from other ecosystems, and that is a great place for Hedera to be. So you bring them over, they get to start to use our DeFi ecosystem, they get to see the strengths of Hedera, and that's what it's all about. Once we have them over here, they'll be hooked, I'm sure. All right, let's move on to NFTs. So Ashfall is still in the lead as far as NFTs, and we also see the cosmetics company ElfU is still there in the top 10 as well. Any other thoughts on NFTs, Zep?
Yeah, so Square Dudes put out their first sort of cinematic animation, actually. It was a lot of work, I imagine, went into that, because it looks fantastic. Clearly the team behind that are very skilled at what they do, but they've also partnered up with, some of the big NFT projects in the ecosystem, including Dead Pixels and Creamies and so on and so forth. So this was a real coming together, real alliance of the NFT communities. So I really suggest anyone who's interested in NFTs to check out their full animation.
Absolutely. And just to give everybody a heads up, Twidgetal is going to be down there at Consensus. We're going to have a booth. We're looking for objects that we can Twidgetize. So if any of our NFT creators have any swag, anything that's, three-dimensional, that holds its shape, that has a matte finish, something along those lines, and wants it to be highlighted down there at Consensus, let myself or Jesse know, and we'll try to get you integrated. We'll test them out and go from there. All right. So the next thing, Zep, is definitely DeFi. We skipped it last week, but I had a great interview with the Pangolin team going over their tokenomics. So let's listen into that real quick. And then I also would like to cover some of the tokenomics and the valuations of native DEX tokens when we compare them either within our ecosystem and also outside of our ecosystem. So let's listen into Pangolin first. Charles, can you explain the tokenomics for Pangolin's native token PBAR?
Definitely. And we're really, really happy and grateful for the opportunity to provide some cliff notes for Hedera folks, just because the research is extremely important when participating in DeFi or Web3, really with any project. And this is all available in our docs, but some cliff notes. So let's get started with this. So this is our fourth network native governance token. And so we have a chief farmer you can get in touch with through our Discord, who spends all their time thinking about capital efficiency and these tokens and tokens that are available through the DEX. And please note, first and foremost, that we take regulatory compliance really seriously, and we did not raise, nor will we raise, any funds via private sales, public sales, ICO, IDO, or IEO. But in terms of the tokenomics at a high level, we have 230 million total supply emitted over 30 months. Token distribution is as follows. 63.1% goes to LPs. That's without a cliff, so it's continuous vesting over those 30 months. And so if you're participating in any farms or single-sided staking, you're receiving those emissions today, and you have been for a little bit over a month now. 15% goes toward our treasury with a 3-month cliff. And I guess maybe for context, a cliff means that token is not available up until that time period is elapsed. So our treasury gets 15% after a 3-month cliff, but there's continuous vesting for 27 months. So it's not like we receive all of that 15% up front. Then 4.4% is for protocol-owned liquidity, which really just mitigates the risk of high slippage for users. 0.5% goes to marketing, 15% goes to core contributors, such as myself. We have a 12-month cliff, and so that's a full year. And then there's continuous vesting for remaining 18 months thereafter. And then 2% for advisors. So 12-month cliff there, and similar to the contributors portion, there's also a continuous vesting of 18 months thereafter. And all of these details are available in our PBAR light paper, which is in our docs. just so you know.
Yeah, and I'll definitely put that in the description so everybody can reference it for themselves. So, Justin, your CEO, he brought up the Sunshine and Rainbows protocol. Can you explain it in some more detail?
Absolutely, yeah. So Sunshine and Rainbows is a novel and open source, actually. So if anybody wants to use it, you would need a smart contract engineer in order to really leverage it. And so, it's just because it's relatively complicated, there's a lot of mathematical proof behind it. But it's a novel and open source staking algorithm that we developed in-house. And what it really does is it rewards loyal users. And so what does that really mean? During DeFi summer or through the curve wars, there are these different mechanisms that were in place that attract liquidity in DEXs or in different pools in a mercenary way. As we saw during DeFi summer specifically, a lot of hedge funds pumping and dumping. We saw that a lot on Avalanche in our experience there, and then on other networks as well, including Phantom, and then obviously the curve wars on Ethereum. But what we're trying to do is attract sticky liquidity rather than mercenary liquidity. And so we disincentivize constant claiming and dumping of emissions. And so this is available in two different ways on Pangolin. We have it both for farms and for single-sided staking pools. So single-sided staking is obviously relevant to PBAR, and that is what it is that people would potentially, if they wanted to use this component in their own, and their own dApp on their own protocol, it's open source. They're able to do so. But for farms, let's start with that. On the farms page, when you navigate there, you'll see the APRs available. Those are all average APRs, and it states that very clearly, but it's a little bit different than most DEXs that you'll go to. When you start farming yourself in any of those farms, your APR starts at 0%. It grows the longer that you're in the pool. So the longer you're in, the higher the APR. If you claim your rewards outright, your APR resets to 0, effectively disincentivizing that action. If instead you compound your rewards, your APR does not reset, but instead goes down proportionally to the amount compounded compared to the position size. It's a little bit of a tongue twister there. This is it's an algorithm. And so it's ultimately backed in this mathematical proof that our smart contract engineers put together. And you can go through and see it. There's actually a little snippet of it that I can share with you that maybe we can overlay here. But the mathematical algorithm there is based on that. And that's with the farms and with single-sided staking. Like any governance token, PBAR's value is really just in determining the protocol's direction through participation in governance voting. But the one differentiator for PBAR has to do with the Sunshine and Rainbows, or SAR, which is, again, open source. And so PBAR is not directly used in governance itself, but it's instead used in creating NFT positions, which in turn grant access to participate in the voting. Those NFT positions represent your APR, and we're working with several NFT marketplaces to make the sales of those NFTs, which have corresponding APRs, a reality. So we're working with, we have open conversations with several teams that are actively building those integrations, such that if you have a staking position, single-sided staking position for PBAR, and your represented APR is 1,000 or something like that, you're able to trade that on an open marketplace and get the fair market value that you would like for that. So more details on the open source algorithm are in our Honeycomb docs, and Honeycomb is our open source a DeFi SDK, which actually is the building blocks for what you're looking at and using on Pangolin. And those docs include our GitHub, which has all the math, if anybody wants to dig into the math there.
Fascinating stuff, Charles. So just to give some context, you were talking about sticky liquidity and mercenary liquidity. Your average retail user, would you consider them generally to be the sticky liquidity?
Yes, absolutely. We want to encourage that activity instead of having it such that people can come in, whales can come in and reap all of the benefits, all of these emissions. They're able to come in with a lot of weight and then pull those emissions from the retail users, which is really the vast majority of users on Hedera right now, which is, sort of one of the biggest reasons we wanted to come here. SAR is brand new. Sunshine and Rainbows is brand new. It's not something that we implemented on Avalanche just yet, but it is something that our experiences on Avalanche have led for us to implement this on new networks such as Hedera.
Oh, great stuff. Charles, thank you so much for swinging by today and explaining your tokenomics.
Absolutely. Thanks for having me. I appreciate it.
Now that we have some more Hedera DEXs with significant volume online, I wanted to revisit the native token valuations. The method I like to use is the ratio between the fully diluted market cap of the DEX tokens and the daily volume of that DEX. For me, this makes the most sense since in the long run, the fees generated by the DEX are the ultimate resource the DEX can use to build and self-sustain. That said, there are other factors to consider, the big one being growth potential. Considering they're starting from a much lower base, the Hedera DEXs have far more room to run in terms of growth. Even still, I'm impressed with the relative valuations compared to some of the other popular platforms out there. Looking at platforms outside the Hedera ecosystem, Uniswap has a daily volume of just over $80 million and a fully diluted market cap of $6.3 billion, which gives us a ratio of 77 to 1. To clarify, the higher the ratio, the richer the valuation. Cake of PancakeSwap has an even more rich valuation at nearly 100 to 1, and Sushi looks like a much better deal based on this metric at only 8 to 1. Looking in the Hedera DEX space, SaucerSwap looks like a good deal at about 32 to 1. Currently, Heli has a richer valuation at 389, and PBAR from Pangolin is in the middle at about 78. But as mentioned, the relative growth of these platforms are going to have a big part to play in the months and years to come. Of course, none of this is financial advice, and you shouldn't value these platforms on market cap to volume alone. So do your own research and please come to your own conclusions. That was recorded last week, and the volume on SaucerSwap has increased a bit, helping their token valuation. Looking at DeFi Llama, we see that SaucerSwap still has the most TVL of all of our dexes at about $19 million. Pangolin is second at $7.5 million, and HelloSwap is holding in there at $5.5 million. The farming rewards on some of SaucerSwap's popular trading pairs are 18% on HBAR HBAR-X, 36% on HBAR Sauce, and 60% on HBAR USDC. The farming rewards for HBAR HBAR-X on Pangolin is 24%, 164% on HBAR USDC, and 470% for HBAR PBAR. Moving over to the HBAR and CryptoMarket, Bitcoin is on an absolute tear as it appears to be a safe haven again in light of all the banking struggles. It's up 7% on the day and over 30% on the week, and is sitting comfortably over $26,000. HBAR is sitting at about 6.2 cents at the time of recording, and like most alts, it's underperforming Bitcoin. It's up about 2% on the day and 8% on the week. If Bitcoin holds on to its gains, I would expect some of that capital to flow into altcoins at some point. Looking at the chart, HBAR should see some support at 6 cents and resistance at about 6.5 cents. So Zeb, that's pretty much all I have. Is there anything else you'd like to pass on to the community?
Yeah, I think, it's nice to have the wind back in our sails again after that hiccup. And, to see things like, Mars, the biggest sweet supplying company in the world, make their bets on Hedera, to see the governing council out in force at Paris Blockchain Week Summit, with ServiceNow and Aberdeen. I think one trend I've noticed just talking this week is this really cool one of sport activation. Sports is one of the the most lucrative industries in the world, but also one of the most energized in terms of the people that are involved in it. The fan bases, people obsess over it, and rightly so in many cases. And so to take that obsession and monetize it in new ways, but also engage the fans in new ways is always what companies and teams and whoever is, they're always looking for ways to activate that community. And so to see us making these bets with the road code, in cycling, in 1 to 11 with Indian cricket and Karataka with Karate Combat, I think this is a really, really smart bet to make. And, we're going to start seeing them come online now. I think road code's actually launching today in some degree. And so we're only going to see more of this over time. And I'm really excited to see that trend there.
Absolutely. We're definitely getting back on track. We'll see everybody next week, and I'm going to leave you with a video from Square Dudes. So watch this one.